Welcome back. So what we're going to talk about in this video is KYC. Now, KYC is often also referred to as CDD, which is client due diligence. All right, so you want to know the difference. KYC, CDD, often the same. But in order to talk about KYC, we have to really go into client onboarding. Now, that's usually the first part of a bank's KYC process. And you need to know these things, so therefore, when you're applying for jobs or they're asking you questions on the interview, you know how to respond, right? So client onboarding is the first part. That's when a client comes into the bank, says, I want to open an account, whether it be a demand deposit account, which are, checking, savings accounts, whether it be a trading account, any kind of account. They'll do some kind of background research to know if the person is who they say they are, any negative news and things of that nature. So that usually requires, if it's an individual, they want your social security number, ID, address, where you live, it's proof of address, and as well, possibly where you work. All right. Business, they'll want the EIN number. They want the business, the formation documents, and whatever state that you formed in. And they'll also want other kind of information to kind of get an idea of what the business is and what kind of business or what kind of industry the business is in, because that makes a difference, right? So once the bank does that and they onboard the client, they usually send it, and each bank does it differently, but they'll send those documents off to their processing, their KYC part. So know your customer, KYC, which is what it stands for. The idea of the bank is they want to know as much as they can about the customer, or at least a reasonable amount, to make a decision as to whether they should continue the relationship with the client or if they should end the relationship with the client. All right, so it's important to know. That's pretty much what the goal is at that point. So the way they do that is research. So if you're looking for KYC jobs, you want to be able to talk about your ability to do research. Okay, now if you've never been in KYC or never had a KYC position, that's fine. If you've done some kind of research, that's what you want to highlight. So that includes, oftentimes what they'll use is LexisNexis is a very often used tool. There are tons of databases in Lexis. You can check court records, state court, federal court. You can search news clippings from the U.S., from all over the world. All right, so that's one tool they use. So besides Lexis, you have what's called WorldCheck, which is owned by Reuters. So that's another company that you can do, and that checks to see if individuals are listed as PEPs, which are politically exposed persons, if they're possibly sanctioned entities, if they've been accused of any kind of crime. And then the next tool that people use, which might be surprising you, is Google. Google is used a significant amount. Almost every kind of AML investigation has Google as a part of it. But it's usually when they use Google, it's almost actually every time, it's just a kind of string, right? So it's like, and if you've never used string searches, it's, you'll have a term plus this word or that word or that word. So let's say you wanted to do, let's say my company, compliance prep plus fraud or AML or crime, or and the bank is going to have their own set of strings that they want you to use. Okay, so that's just one thing you want to be aware of. So when you're doing and looking at KYC, what you're really looking at is trying to determine if the person is who they say they are. And the best way to find that out is to take that information and run it against different databases. If you're in Lexis, you may run what's called, I believe it's called like a people search. I can't remember the exact report, but his report is pretty much like a detailed background of the person. It tells you their past addresses, their past jobs, tells you who may be related to them, in those, who shares the same address as them, if they're on the board of directors, if they've been arrested, if they have parking tickets. Okay, like it's actually a pretty extensive search. So that's what you want to make sure that you're aware of and that you're really paying close attention to, right? So when you're applying for these jobs, you want to be able to talk about your ability to use LexisNexis. Some banks also have you use Westlaw for smaller amounts, but for the most part, it's mainly LexisNexis. So that's what you want to be kind of focused on and really looking at, okay? So we have LexisNexis, then you have WorldCheck, which is used, again, almost every project I've had is used WorldCheck. So you have LexisNexis, then you have WorldCheck, then you also have on top of that, some places might have RDC, MIS, some places might have you use, what's the company? The other one escapes me at the moment. Dow Jones. There we go. So Dow Jones is another company, another database that they may have you search. So these are all things that you may have to search. and places that you have to really try to find the information. And you're also really looking for negative news. Now, negative news is something that will cast the entity in a negative light. Now, there are differences. There's negative news that makes you want to end the relationship, and negative news that it may be bad in its surface, but it's not necessarily related to whether the bank will do business with the person. So, for example, let's say we find negative news that the person was accused of check kiting, right? Which is often AML, a money laundering technique. That's one thing that we're like, okay, well, that's a red flag. That's something that the bank probably wants to know, because it will likely impact whether they want to continue to do business with the client. Because if they accused of check kiting, that's something that's serious, and that's a fraudulent offense. Now, you might find something that a person might have been accused or might have been convicted of domestic violence. Now, while that's a horrible, horrendous crime, and through the lens of a banker or of a financial institution, it's not negative to the point that they would want to cease the relationship with the client. Okay, so you want to make sure that you know the difference between truly negative news in the financial sense and just negative news in general. Okay, now that's not to say that in your investigations you won't mention that that negative news, but that's usually not going to make the bank decide to end the relationship with the client because they have crimes like that. Now, if they have crimes of like fraud or embezzlement, things of that nature, that's going to make the bank want to end the relationship, because then that means the bank could be used and as part of these fraudulent schemes. All right, and the bank wants to protect its reputation. And the best way to do that is to not have accounts with individuals who could possibly be doing illegal activities. All right, so that's what you want to know with Know Your Customer. We'll get into it more enhanced due diligence and things of that later on. But that's just the first one. I hope you guys enjoyed it. If you have any questions, comments, comment below, and we'll keep going. And remember, I think all the comments, I'll make one video answering all you guys' questions. All right, look forward to talking to you guys tomorrow.